So welcome back to the podcast, everyone. Today's guest is Chutima Barrios, and she's a multifamily investor. But rather than me telling you who she is, why don't we hear it directly from her? Chutima?
Hey, thank you for having me. My name is Chutima Barrios and I live in Philadelphia, Pennsylvania. I've been doing real estate investments for about 5, 7 years. And before that, I work in finance investment world. I help private equity fund invest in businesses,
Hmm.
help specific company in healthcare related industry grow through acquisitions. So all of my prior experience is about investing, growing wealth, but for someone else before I transition to started my own company, Rent Roll Capital, so that I can help my investors grow their wealth through real estate investment.
Okay, well, according to your background, I think you're the perfect person to, to branch into what you did. And I think it's better to do it for yourself. All right, so let's jump into some questions. So you said you had like 5 or 7 years of experience in real estate, but how did you first get into real estate? What inspired you? And was there like some, light bulb moment that made you focus specifically on multifamily?
Yeah, so it's a long story, but it started back in college when I read Rich Dad Poor Dad book.
Mm,
It's that book.
The Purple Bible. Yeah.
Yeah. So that book, well, first it inspired me to start investing. Like we learn about cash flow, right? Like four
Hmm.
type of cash flow. And it made me started investing. And like many of you, I started with the stock market. It felt accessible.
Yep.
And honestly, I thought it would be easy,
Hmm.
right? But the reality is, unless you are a full-time investor, it's hard to beat the market.
Yes.
So I was mostly just getting average returns around 7 to 10%, right? And then, but in the beginning of the like my investment time or like a hobby, I didn't really care much because I was by myself.
Okay.
So what really got me into real estate came down to two things. So first, my husband, he encouraged me to get into real estate because it's the asset class that he knows best. And
Okay.
he always said, I don't understand stock market. So I was like, okay, I thought I did. So and I wasn't sure if I would be a good real estate investor even, right?
Mhm.
Because it's a new asset class for me.
Right. Yep.
So I didn't jump in right away. And but then the second turning point was when I became a mom.
Oh, okay.
And you probably heard the saying, it takes a village to raise a child.
Yes.
That's when I realized I needed more resources, both time and money.
Hmm.
So having money but no time with kids, that's not the life I want.
Right.
And having time but no money
Also not
isn't
the
great
life.
either.
Yeah, yeah, yeah.
So I decided to give it a try and I
Hmm.
bought my first property and the rest is history.
Yeah.
So and why multifamily? I think it's just easy to understand. I just use the simplicity concept by Charlie Munger. He's a like he's passionate about simplicity, right?
Hmm.
And everyone needs a place to live. So it's just the asset class among real estate that is easy to understand.
Okay, okay. Yeah, so I think parenthood for a lot of people is a really, really powerful motivator and it makes people kind of like reevaluate their life directions and everything like that. So, okay. All right. So can you walk us through your first multifamily deal? And don't leave with anything. We want to hear the good, the bad, the ugly, everything. And also maybe like what surprised you the most? Anything you said, oh, I will never do that again. Yeah, so let's walk through your first multifamily deal.
Yeah, so the very first one was a house hacking. So we bought a 4 unit building
Hmm.
with a basement that we converted into a short-term rental
Yep.
furnished unit. So basically we have that 5 units in one building.
Yes.
And then we live in one unit. So we get rental from the 4 units. So
Hmm.
that help us with the cash flow. Like the down payment was also low because we can use the FHA loan
Okay. It's like
3.5%.
3.5%. Okay. Yeah.
Yeah. So that was beautiful. And then we also did like some other small multi-unit buildings like duplex, triplex, quadplex, right? So we call it residential, multi-unit residential buildings,
Hmm.
which then we always did full gut rehab
Yeah.
because it was easy and the entry point was low. The entry price, like 50K, 70K, which we had
Hmm.
our own capital to do it.
Yep.
And everything went well until we started to do bigger thing. So we saw this 8 unit building
Hmm.
that needs full gut rehab as well.
Yeah.
And we applied the same experience of the small units, small
To the
building,
eight
to
unit.
this 8 units building. So it turned out it was not a good idea
Uh-huh.
because it's bigger, it's much bigger building, and it took longer. Like everything became more complicated.
Yeah.
It's not just like double. Like let's say if you work on the quadplex 4 units building
Hmm.
and then now you're working on 8 units, it's not that everything gonna double the work. It's more than double.
Hmm.
Take longer to do electric wires, plumbing, city approval. The process is different.
Right.
Um, so let's say when we were doing full gut rehab of the 4 unit building, we took about 4 months to
Hmm.
complete.
Hmm.
But the 8 unit building didn't take 8 months. It
Uh-huh.
took 12 months. So that one
Okay.
year, so
Yeah.
our cash flow got stuck there.
Hmm. Hmm.
And yeah, I mean, eventually we got it done, but it was quite a painful process with like
Right.
we couldn't do anything else. Like our cash flow got stuck in that building for a long time.
Right.
It's just missing opportunities, basically.
Hmm.
So I would not prioritize a heavy value added building,
Yes.
but I'm not saying I would not do it again. I just don't prioritize it.
Okay.
That might be like really, really good deal coming up and I would
Yeah.
do it. Yeah, but I would be very selective about that,
Okay.
right?
Well, sorry, go ahead.
Yeah, no, just to add on to that, like, and that one specific building bring us a lot of learning curve.
Uh-huh.
So we were investing in Philadelphia, which is
Hmm.
our home base. And the city started enforcing development restrictions in that neighborhood.
Yeah.
What it means is it's kind of become it just discourage developers to go in because you
Hmm.
now cannot build higher. Like um if you want to build new buildings, it cannot be higher than the existing buildings. So let's
Okay.
say you can do only 2 floors, 2 stories, 3 stories. You cannot add roof deck. You cannot do 4 stories. You cannot do
Hmm.
5 stories, which doesn't make economic sense
Yeah.
for developers. With that, it just like slow down or make the market value
Hmm.
less attractive
Okay.
in the neighborhood. So I think that's just like learning about when we jump from residential experience to commercial,
Hmm.
and also like these regulatory risks that we didn't anticipate
Right.
were our lessons learned.
Yeah. Okay, okay. Yeah, so actually I was going to say two things really quickly. Number one, I would definitely highly recommend that anyone who can start off with a house hack. I think it's like the best way to get into real estate. And I'm so jealous that I didn't have the opportunity to do that. But if I could, I would definitely, house hack. And I think that's like the ideal way for anyone to get started. Is you're very unlikely to fail. Worst case scenario, you'll have a cheaper place to live than, because you need to live somewhere anyway. But anyway. And then the
Yeah.
second thing is maybe you kind of talked a little bit about a mindset shift, and actually that kind of jumps into my next question. So how has your strategy evolved, since the first deal? Let's talk about first of all, deal criteria.
Yeah. So now we work we look at markets where the regulation is more friendly.
Hmm.
I mean, we knew, even though we were doing like investings in Philadelphia, and we knew that the government, like the city is not really, the regulation is not landlord friendly, stuff like
Right.
that. But we still like, okay, things still work, right?
Yeah.
But it works in the small scale. Like
Yeah.
when we want to expand, we want to buy bigger buildings, we need cities that will be more business friendly. The approval process is faster. And then when we operate it, if we have to do any eviction, um, there's a rules and regulations in place where we can process the eviction in an efficient manner.
Yep.
Um, so yeah, so the regulations, the city with regulations, business friendly. job growth, right?
Hmm.
Population growth, income in specific neighborhood,
Yeah.
because one of the buildings that we invested, we were kind of speculating
Hmm.
that it would be changing. We call gentrifying, but the gentrification took longer.
Okay.
So if you look at the average household income in that neighborhood, it would be, let's say, 75,000. We were expecting it to be 100K,
Yep.
but it never reached 100K because the city put in this restriction.
Okay.
So like it never really changed to what we expect it to be.
Hmm.
So I will look at the household income of specific neighborhood, like existing, and on speculate on that part,
Okay.
right? Then just invest based on the current information.
Yes.
Like that's what you can control.
Yeah.
Yeah.
Okay. Okay. So, and then how about like your risk tolerance? Any changes there?
The risk torrent, I think, yeah, so I think I would apply the same thing about
Hmm.
like the speculation part. Like look at the cash flow first,
Yes.
understand when the cash flow will come in. If it takes 6 months, you know how much capital will sit without having cash flow coming in for 6 months. So
Hmm.
set better expectation
Right.
on the cash flow. Um, and then again, if I haven't even started looking at new development projects, I don't have
Yeah.
that kind of risk appetite.
Yeah. Yeah.
After
Yeah.
working with the city, I'm like,
No, no, no. Yeah.
yeah, things can take longer than usual. So
I know someone who maybe they have land that they want to develop and it's been sitting there for 3 years simply
yeah,
because they couldn't get, the city permits or the city approval or whatever. So I think, oh my goodness, that is kind of like a disaster. And then on
yeah,
top of that, then you need to get the financing. So, I'm sorry for him. But anyway, he's doing quite well otherwise, but yeah.
yeah,
Okay. And then
right.
how about like mindset shifts?
Mindset shift. So yeah, in the beginning, I had a lot of fear, self-doubt,
Hmm.
right? Because it's new, like,
Right.
and it's like making a change to yourself. And many of us, when we have to change ourselves, we have fear because we're stepping outside of our comfort zone.
Definitely.
We just never know what's gonna happen next. What if I fail? What if, somebody's gonna say this to me?
Hmm.
So there was a lot of that
Right.
fear and self-doubt. But now I understand, like after I get past that, right? And I know, okay, so we just need to be informed, right? Educate ourselves,
Right.
understand this asset class, how to make decision based on information we have,
Hmm.
right? So that helps me like, okay, now I'm just analyze the deals and make decision.
Yeah.
Yeah.
Okay. Okay. Well, I'm glad you got through that, and now I think you can tackle deals with, with much more confidence because okay, the numbers make sense. Okay, let's go. All right.
Yeah.
Hey, if you've got a real estate deal, a problem, or even just a question, we want to hear about it. Doesn't matter if it's big, small, complicated, ugly, or somewhere in between. If it's a good deal, we're absolutely interested. Period. And if you've got capital, you need to put to work in solid real estate opportunities. We've got those too. Either way, let's talk. Here's how this works. We always need more deals. We always need more capital. And we always find a way to make it happen. No games, no runaround. If we can't work together directly, we'll hand deliver you to someone who can. All right, so let's shift gears. Let's talk about tips and pitfalls. So what are some of the tips or pitfalls that you have about finding deals?
Finding deals. I would say for me, I still work with brokers. So
Mm-hmm.
build relationships with brokers.
Right.
Um, I mean, they do business too, right? So they want to work with someone who can close the deal and
Yep.
know that you are serious about it. So
Yes.
when they send you deals, at least respond to them, say, hey, I'm not interested in this asset class because of ABC,
Mm-hmm.
or I am interested, but this is the questions I have. So keep talking to them, and then they will send you more deals. And I had this one brokers who sent me deals in Philadelphia because we kept talking, and I always go to visit the properties that he sent, even
Yep.
though sometimes I didn't submit LOI. I just told
Hmm.
him like, oh no, this is the number. Things didn't always work out, but at
Right.
least one day he was like, hey, this is the off-market deal. Are you interested?
Hmm.
Yeah.
Okay. Yeah, I haven't been able to verify this stat, but it does sound quite reasonable. But I heard that like over 80% of people do not respond to brokers. So if you want to be in the top 20%, all you have to do is respond. Oh, this deal doesn't
Yeah.
work because of ABC.
Yeah.
And I think your story, is a perfect example of this. You responded, and you got an off-market deal. That's, that's the dream.
Yeah.
Okay.
Right.
So how about like tips and maybe possibly pitfalls about like operating or executing after your LOI has been accepted and you're into the deal. What tips do you have about operating and actually executing on your plan, for example?
Yeah. So the I think in my current multifamily deals, the operation's pretty it's going well because we
Hmm.
have property management company being part of the GP team. So our interest online,
Okay,
the
yeah.
property management company like really push on the leasing and we work well together. Maybe the part that was not beautiful was when we have tenants that, they do illegal business in the
Hmm.
building. We
Yeah,
find out, we evict them.
right,
Yeah. So I think it's just part of doing a business. You can really never nothing is perfect,
right,
right? You
definitely,
do
definitely.
the best screening you can. But yeah.
Yeah, I think even if you do the best screening, some people are gonna slip through the so-called cracks, and they can hide things, and there's nothing you can do to
Yeah.
check it. And then when you find out, okay, yeah, gotta get them out as soon as possible. Okay, do you have anything that you want to say about like exiting a deal? So maybe the final step, either refinancing or selling, or the exit plan for deals.
Yeah, usually I do cash out refinance. So I
Mm-hmm.
haven't sold the properties yet. But the concept of cash out refinance is when you buy property at a low price, right? And then the property value increase. So let's say you bought a property at $1 million. dollars.
Mm-hmm.
3 years later, the value increased to 2 million, right?
Yep.
So you can cash out from the bank. They come do appraisal now. Um, the original purchase price 1 million with the debt we borrow at 700K,
Mm-hmm.
70%,
Yep.
right? 3 years later, property value at 2 million. Now we are borrowing 70% of that, so 1.4. So
Mm-hmm.
you can return the original debt,
Right.
700K, and you have 700K left back in your pocket.
Mm-hmm.
So you get initial capital back to your pocket and you continue holding the properties, you continue
Yeah.
getting the cash flow without
Okay.
having
Yeah.
capital in.
I think this is the ideal situation for me, and I think for many investors, right? You pull all your money out and then you hold on to the asset, and then now it's just infinite returns, and you can
Yeah.
ride off into the future. Like, so for me, I would definitely prefer this over selling, but of course it depends on it depends on market conditions. It depends on many things, but refinancing is the number one priority if you ask me. Yeah.
Yeah.
Okay. All right. So the final round. Let's do a rapid fire round, and just I'll shoot some questions at you, and you just don't think too much. Just tell me the first thing that comes to your mind. All right. So the first question is, what's your worst tenant story?
Yeah, the one that did
Like,
illegal business. That's just like, oh
uh-huh.
my gosh. And well, and this the thing is so okay, he was selling drugs.
Mm-hmm.
And the thing is he bring clients to the building.
Yep.
So it's create like bad environment because now you see people like walking in and out of the building and
Yep.
or hanging out around the corner. Yeah. So it's not just like it just have like impact on other tenants.
Yeah, definitely would have
The
a
feeling
negative
of
impact.
safety.
Right.
Yeah.
Yeah. Was that like a C, B, or what class of
C,
property was that?
class
C.
C.
Okay. 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 Well, kind of
Yeah.
figured, but those are the risks. Those are the risks. Okay. How about your favorite expense saving hack?
Expense saving hacks. Well, we changed the water uh the hot water unit to be
Mm-hmm.
smaller size so that the water flow doesn't come out too much because
Okay.
like in some of the buildings we have to pay water and we
Hmm.
couldn't do well the reimbursement is kind of a little tricky here in Philadelphia.
Okay.
So instead of letting tenants using the 400 cubics of water with strong pressure, we just
Hmm.
lower it so that they finish shower quickly.
Yep. Yep. Yep.
And sometimes we do shower instead of bathtub, and that just
Yep.
like help us save the water expense.
Okay. Okay. Fair enough. All right. And then how about like, there's a lot of advice floating around about real estate. What do you think is some of the most overrated real estate advice?
Well, I think not overrated, but wrong advice is when people say real estate investment is risk free or
Hmm.
multifamily. Like there's no risk in investing in multifamily.
Yeah.
So in every investment, even bond,
Hmm.
there's
There's always
risk.
risk. Right. Yeah.
Yeah, there's always risk. And it means risk means like things don't go the way you want it to be,
Hmm.
right? So you expect to get 4% interest rate, but the rate change go up and down. So that's
Yep.
risk.
Yep.
Yeah, same thing with multifamily. Even though I say, yeah, it's so simple, everybody needs a place to live,
Hmm.
but there's still risks of like maybe we have vacancy during the turnover time,
Yep.
or during COVID time, people move around a lot in the
Hmm.
country. So one market that used to be so good, like
Yeah.
let's
They
say
can
New York
change.
City,
Right.
yeah, it
Yeah.
can change. People move out. Yeah,
Yeah, I think there's always cycles, things go up and down and so on. Okay. And
yeah.
how about underrated then? What advice do you think is underrated?
Oh, underrated is a good one.
Hmm.
I would say do it yourself, don't partner with other people.
Hmm.
Because most of us were trained to do things by ourselves.
Yep.
Like when you grow up, your parents say, no, you must know how to do this thing, right? Don't ask for
Hmm.
help.
Hmm.
But in real estate, when you do it by yourself, you can do just this
A
much.
little. Uh-huh.
But when you partner with other people, like you can scale much faster because you can use your strength
Hmm. And
in
their
that
strengths.
area.
Uh-huh.
Yeah, you just leverage other people's strength,
Right, right, right.
right? And then you can grow faster.
Yeah. Okay. So then the underrated advice is teams. So you work with teams, right? Work with other partners and so on, and don't do it by yourself, right?
Yeah.
Okay. Um, so what do you think? So speaking of strengths, or as we like to call it, superpowers, what do you think your superpower is, or your unfair advantage?
My superpower would be being consistent.
Mm-hmm.
So in here in commercial real estate investing world, you really have to be consistent in many area. Whether
Yep.
you work with investors, you have to keep communication with them. You're finding deals, you gotta keep communication with
Mm-hmm.
the brokers. Um, yeah, so it's just being consistent with what you do, and it will
Yep.
take you to where you want to be.
Yeah, it reminds me of the book. I don't know if you read the book Atomic Habits. I
Oh
forgot the
yeah.
author's name. Yeah, but it reminds me of that. It's basically, if you want to be successful, you just build systems. And you
Yep.
okay, you every day you're gonna do this, you're gonna be consistent, and it's easy to find success this way. All right. I don't like to use the word regret, but I can't think of something better. So maybe is there anything that you would do differently, if you could go back or whatever else? Hmm.
Yeah. It's so cliche to say, but I would say that I would start sooner.
Hmm.
It's just
Yeah.
like after you experience it, I'm like,
Hmm. Yeah,
there's
why
just so
did why
many
didn't I do this
benefits.
before? Right, exactly.
Yeah, like
Yeah.
I should have listened to my husband the first day.
Uh-huh, uh-huh.
Yeah.
I keep asking this question and I keep hearing that over and over. I'll start sooner, start sooner, start sooner. So, for anyone listening to this, who's sitting on the sidelines and you're thinking about getting into real estate, start sooner. Whether you're starting as, like, as a limited partner, you're putting in an investment passively, or if you want to get into it in an active space, I don't care. I think, the sooner you start, the better. I definitely agree with this one. Okay. And do you have like what's your best advice for, let's say, new investors?
Educate yourself. I
Mm-hmm.
think don't just jump in like bright-sided. You want to know how to look at the deals. Like, is this really a good deal?
Mm-hmm.
Is the sponsor going to be able to execute? That's the business plan makes sense,
Yep.
right?
Mm-hmm.
Because everything can look good on paper.
Yep.
but we
everything
need
could look good.
to,
Yeah.
yeah, we need to vet the deal, the sponsors, and understand the market. Yeah.
Yeah. Okay, okay. So I think that was my final rapid fire round question. So, but is there anything that I didn't ask that you think, maybe the audience would have liked me to ask, or maybe you wished I asked you? Anything I didn't ask that you think I should have asked?
No, no, this is all great questions. I still think like everybody start from somewhere,
Mm-hmm.
and the best investments is to invest in yourself,
Yeah.
do this kind of education, keep listening to podcasts, and but knowledge is not power.
Mm-hmm.
Execution is the real power. So once you get your knowledge, you gotta make decision and take action.
Yeah, I think if you have knowledge but you don't apply it to anything,
Yeah.
there's no power in that. You have to use it in the right way and you have to apply it just like you said. Okay, so if somebody wants to get in touch with you, maybe they want or they think, oh, Chutima has so much knowledge, she gave me so many good tips, maybe they want to invest with you, maybe they want to learn from you. How can someone get in touch with you? What's the best way?
Yeah, you go to my company website, redrowcapital.com, and there's a resource that you can download learning about how to invest in real estate or multifamily market updates. And then you can send me an email, Chutima, Chutima, at
Hmm.
redrowcapital.com.
Okay. All right. Oh, and so sorry, one question I did forget to ask is is there any project that you're working on right now that you can share or you want to share with the audience or
Yeah, I'm working on a project. I cannot share it on podcast because of the regulations. We need
506B? Okay.
506B.
Yeah, okay.
Yeah, but I do have a project. If anybody wants to learn about it, reach out to me and we can set up a time to talk about it.
Okay. Okay, great. All right. So thank you very much for, coming on the podcast today. Hope to have you back again, to see how you're doing, maybe 6 months later, whatever. I'm not sure of the exact timeline, but this was fun and I had a good time. So yeah, thank you very much.
Yeah, thank you for having me.
Okay.